Good afternoon, everyone. I would like to welcome you all for the 5-day FDP on the financial management and the investment strategies in changing world, organized by the Department of Cooperative Securityship in Sri Kanniga Parameshwari Arts and Science of College Women in association with Pencil Bits. I take this time to introduce about college. Once again. Sorry for it, some technical issues. About the college, Sri Kannika Parameshwari Arts and Science of College Women. It's a committee management of SKPD is a charity foundations of Sri Kannika Parameshwari Arts and Science College Women for the promoting the women educations in 1999. The foundation, the stone of college built for leading the education minister, Mr. M. Anbaragan, and have been graced inaugural functions. Sri Kanika Parameshwari Arts and Science College of located in the business commercial area in Chennai. The committee management has been deeply faith of rich industrial traditional to the development of personality of young women educations and women empowerment and impressing the value of compressive tolerances, understanding, care, services, and love. They believe the motivations. They believe the motivations in the study of students committee and in curriculum value systems in them through 3 P's of performance, progress, and progressives. Today, the combinations of effective SKP, the family of institutions in family of institutions of the 115 teaching and non-teaching faculties and 1,857 students and 12 UG students and 3 PG and 1 full-time and part-time PhD programs. The institution has completed 25 years successfully year of experience in field of education. The journey of SKPC is in a 528 student has secured the university top 10 ranks. The institution is accomplished with affiliated to the University of Madras and curriculum has been formulated and framed with the University of Madras CBCS and the patent of choice-based credit system to enhance and enrich the students' knowledge in the different disciplines. The institute is aggregated by the NAC and ISO certified and obtained 2F and elastical Telugu material systems. About the Department of Cooperative Secretaryship. The department of incorporated with the year of 2000. The student has a strength with the 19. Currently, the department has 205 students and 4 faculties. The department has been long with the educations and not just the mean of knowing and doing, but being and his honest, and hence it is need of the students' growth with the revolvated wellness. The department equips the students an interdisciplinary skill set and required the career in the cooperative secretary with the Department of Discrimination Knowledge without the accomplishing the standard and values. I take this great opportunity to introduce our today's speaker. Dr. S. Muthukumaran sir is highly accomplished and academic researcher with a PhD in management from the Bharatdasan University, Coimbatore 2022. With extensive experience, the academic span over 11 years, he has served as an assistant professor in reputed institutions across Tamil Nadu and specialized in the business, administration, and management. His passion of education is a research in reflected his numerous publications, UGC apprised an international journal, and he's actively participated in the national conference and seminars. Dr. Muthukumaran sir is also the authored books including the managerial economics and organizing behavior, showcasing his dedications to the enrich of field of the management studies. In addition, the academic collaborations with Dr. Muthukumaran sir has excellence in the various extracurricular roles such as entrepreneurship development, cell member, and NAC coordinator, and achieving the significant milestone in the inspiring quality assessment. He's also acted as a resource person for the numerous workshops and seminars on the topic like stock market analysis, psychologist roles, and entrepreneurship success. He's embedded onto combining his teaching excellence with administrative experience, make his dignification figures in field of management educations. Welcome you, sir. Sir, it is audible, sir. Sir, it is audible, sir. Muthukumaran, sir.
Yes, ma'am.
Madam.
Good afternoon, sir.
Good afternoon, ma'am.
Good afternoon, sir. Audible, sir.
Good afternoon, madam. I'm audible?
You are audible, sir, but your voice is a bit like the slides are visible, sir. Slides are visible, but your voice is not so much audible.
Voice is not so good. Oh, wait. I'm audible now, ma'am. I'm audible? I'm audible, ma'am.
Yes, sir, you are audible.
Okay. Thank you. Good afternoon to all. I am extremely happy in the midst of both eminent faculty members and event organizers of the program. I am always grateful and thankful to the respected principal and most esteemed respected correspondent of the excellent institution and respected IQC coordinator and even convener and even coordinators. And the even coordinators of the excellent institution for having given the golden opportunities to share the knowledge before you. We all inculcate and infuse the good qualities of hard work, involvement, and dedication. Thank you all. Today's my topic is a investment 2025 navigating market uncertainty with confidence and smart strategies for success. The interesting numbers of about India. Wait. Interesting numbers about India. The population is 144 crores. Among 136 crores people are using Aadhaar card holders, and 120 crores people are internet users, and 114 crores people are using mobile subscribers, and 95 crores people are enrolled total voters, and 80 crores people are using e-commerce user, and 65 crores people are using smartphone users, and 50 crores people are OTT user, and 40 crores people are social media user, and 30 crores people are UPI user, and 28 crores people are food delivery platforms, and 20 crores people are payment user, and 37 people are in urban area, and 63 people are rural population, and 9.3 crores people are digital learning user, and 9.3 crores people are Sanjeevani health care user, and 51.4 crores people are health insurance user, and 8 crores people are stock market user, and 3.5 crores people are in mutual fund investors. Yeah, these all users are in our country population 144 crores of people, because our population is 144 crores. In entire world is our big market in every business market in every business of our country. The mainly coming years and recent years mainly focused on stock markets and digital marketing. Digital marketing is 8 crores people are using, and stock markets also 8 crores people are using. These users are minimum peoples, because they have known knowledge and awareness of the stock market and digital marketing. Coming years, these two types of sector is the space is, just a minute. Coming years in the நம்மளுடைய ஸ்டாக் மார்க்கெட் அண்ட் டிஜிட்டல் மார்க்கெட்டிங், இதுக்கான வாய்ப்புகள் வந்து வரக்கூடிய காலங்கள் என்டையர் வேர்ல்டுலேயே அதிகமான சான்சஸ் இருக்கு. அதே மாதிரி இந்த வேர்ல்டுலேயே பிக்கஸ்ட் மார்க்கெட் பிளாட்ஃபார்ம் அப்படின்னா நம்ம இந்தியா அண்ட் சைனா. த இந்தியா இஸ் லைக் இன் என்டையர் வேர்ல்ட் கண்ட்ரிஸ். ஆஃப்டர் தட், why the rich get richer? Which type of person are you? Why the rich get richer? ஏன் பணக்காரங்க ஆகுறாங்க, என்ன காரணம் அப்படின்னா, இந்த ஏர்ன்ஸ் திஸ் மச் 100 ஒரு 100 ரூபாய் ஒருத்தவங்க ஏர்ன் பண்றாங்க அப்படின்னா, அதை ஸ்பெண்ட் பண்றதும் அந்த புவர் பர்சன் 100 ரூபாயாவே ஸ்பெண்ட் பண்றாங்க. அதே ஒரு ரிச் பர்சன் பார்த்தீங்கன்னா, ஏர்னிங் 100 rupees, save 25 and investment 25 and spends 25. இந்த 3 விதமா அவங்க எவ்வளவு ஏர்ன் பண்றாங்களோ அதை டிவைட் பண்ணி சேவிங்ஸா ஒரு பார்ட் ஆஃப் அமௌண்ட், இன்வெஸ்டா ஒரு பார்ட் ஆஃப் அமௌண்ட், ஸ்பெண்ட்ஸா ஒரு பார்ட் ஆஃப் அமௌண்ட், இந்த மாதிரி அவங்க அந்த பார்ட் ஆஃப் அமௌண்ட் செக்மெண்டா பிரிச்சு அதோட இன்வெஸ்ட்மெண்ட், சேவிங்ஸ் இந்த மாதிரி கொண்டு போறாங்க ரிச் பர்சன். ஆனா புவர் பர்சன் எவ்வளவு சம்பாதிக்கிறாங்களோ அவ்வளவு அப்படி அதே லெவல்ல அவங்களுடைய ஸ்பெண்டிங் எக்ஸ்பென்சஸும் இருக்கு. ஃபார் எக்ஸாம்பிள், ரீசெண்டா நம்ம எல்லாத்துக்குமே ரீசெண்டா ஒரு தெரியும் நினைக்கிறேன், முகேஷ் அம்பானியோட சன்னுக்கு மேரேஜ் ஆச்சு. அவங்களுடைய மேரேஜோட எக்ஸ்பென்சஸ் எவ்வளோன்னா 5,000 crores. மொத்த என்டையர் கண்ட்ரியே வந்து அவங்கள ரொம்ப திட்டிகிட்டே இருந்தாங்க. என்ன 5,000 கோடிக்கு கல்யாணம் பண்ணணுமா, 5,000 கோடிக்கு கல்யாணம் பண்ணணுமா, இந்த அளவுக்கு ஆடம்பரம் தேவையா அப்படின்னு சொல்லிட்டு இருந்தாங்க. ஆனா இதே ஒரு புவர் பர்சன் நம்மள ஒருத்தவங்க பாத்தீங்கன்னா, நம்மளுடைய டோட்டல் அசெட் வேல்யூ ஒரு 3 crores or 5 crores அப்படி லெவல் இருந்துச்சுன்னா, நம்மளுடைய மேரேஜுக்கு நம்ம எவ்வளவு செலவு பண்ணோம்னா குறைஞ்சபட்சம் ஒரு நம்மளோட செலவு எப்படி இருக்கும்னா ஒரு 20 lakhs 25 lakh இந்த லெவலுக்கு நம்ம செலவு பண்றோம். ஆனா அம்பானி 5 crores பண்றது அதிகமா இவங்க சொல்றாங்க. அவருடைய டோட்டல் அசட் வேல்யூல அந்த அமௌண்ட் 0.5% கூட கிடையாது அவரோட எக்ஸ்பென்சஸ். அப்போ 0.5% கூட கிடையாது. நம்மளோட எக்ஸ்பென்சஸ் 3 crores or 4 crores நம்மளோட டோட்டல் அசட் வேல்யூ. அந்த அசட் வேல்யூல 20 லட்சம் 30 லட்சம்னு சொல்லிட்டு நம்ம 30 லட்சம் சொல்லி எக்ஸ்பென்சஸ் பண்றோம். அதனுடைய பர்சன்டேஜ் கம்பேர் பண்ணல அம்பானி செலவு பண்ண பர்சன்டேஜ் வந்து வெரி வெரி லோ பர்சன்டேஜ், வெரி லோ பர்சன்ட். அவருடைய எக்ஸ்பென்சஸ் ரொம்ப கம்மி அவருடைய டோட்டல் அசட் வேல்யூ கம்பேர் பண்ணல. Just a minute. Okay. Next, financial literacy. The financial, our topic, the main point of mainstream is the financial literacy. The financial literacy refers to the ability to understand and managing person's finances effectively. It involves having knowledge of various financial aspects such as the major financial aspects. This major components of literacy. The components are budgeting, savings, investing, and credit management, risk management, tax planning. If budgeting, creating a budget to manage income and expenses, as well as savings, also set fund for short-term and long-term goals. And next components of financial literacy is investing. The investing, understanding various investment options such as stock, bonds, and mutual funds. And another component is the credit management. This credit management, understanding the credit scores like credit card and loans. Loans and risk management. Next is the risk management. The risk management insurance options such as health insurance, life insurance, and disability insurance. Next components of financial literacy is retirement planning. The retirement planning savings options such as 401k, IRA, and pension plans. These are in retirement planning. The last one is tax planning. The tax planning is the major components of financial literacy. The tax law and regulations, including the tax deduction and credits. These aspects of these all are the major components of financial literacy. These components is entirely help with our knowing the financial literacy. And next is importance of financial literacy. The importance of financial literacy, the majorly informed decision making and financial stability and wealth creation and reduced debt. If informed decision making, financial literacy enables individuals to make informed decisions about the financial resources. As well as financial stability, also financial helps individuals manage their finances effectively, reducing the risk of financial instability. And then wealth creation. The wealth creation enables individuals to make informed investment decision, potentially leading to wealth creation. And last one is reduced debt. The financial literacy helps individual manage and the debt effectively, reducing the risk of debt and drops. This is the major importance of financial literacy. This after that, how to first we see that financial components of literacy and importance of financial literacy. Now, how to improve our financial literacy? Our financial literacy improve, we need to first education. The education, how to we learn to that financial literacy? Take online courses and workshops and reading books and finance, personal finance. It is our equipped our knowledge and knowledge about financial literacy. After that, seeking professional advice. This professional advice always need to consult with a financial advisor or a planner. Next is a practice. Everyday life. Everyday life, you apply the financial concepts in our home, in our home budgeting, and some other functions are you are apply for that financial concepts, and stay informed. The last one is stay informed. The stay informed, stay up to date with the financial personal finance news and trends. These are always you are update the knowledge about financial literacy. These four major points is you to learn and you to improve your financial literacy. The maximum financial literacy. By improving the financial literacy, individuals can take control of their financial lives, make informed decisions, and achieve financial stability and security. After that, next is more than half of India's personal wealth is a value of fixed asset. This analysis of household wealth shows that property followed gold and banks deposit and Indians' biggest private assets. Our always Indian personal ownership base are in total 51.3 percentage of properties. After that, gold is for 15.2 percentage, and bank deposit is 13.3 3 percentages, and equity is a 5.8 percentages of 5% investing, and insurance fund is 5.7 percentages investing and investments, and provident fund and pension fund 5.7 percentage of investments, and the cash deposit is cash in hand is a 3.0 percentage is cash in hand assets. These are all Indian household assets ownership in the share about that. This after that we see the major part. The investment strategy for 2025, navigating market uncertainty with confidence. Our topic is part of major this. Part of major. The first one is the understanding the 25 macroeconomic environment, and second is diversification remains essential, and focus on value stocks and market volatility and growth investing and the tech boom. Fifth one is emphasizes inflation protected investment and take advantages of market cycles with tactical asset allocation. And seventh is green investing and SCG trends. SCG strength, and it is income investing for stability. Ninth is cryptocurrency and digital assets, and risk management, protecting your investments. And 11th is utilize technological tools and financial advisory services. And last is final thoughts, crafting a resilient and portfolio for 2025. These 12 major aspects, aspect is creating investment strategy for 2025 in navigating marketing in uncertainty with confidence. As the world of finance continues to evolve rapidly, 2025 presents a mix of opportunities and challenges for investors. Navigating this ever-changing landscape requires a blend of strategic thinking, adaptability, and a solid understanding of key trends that will shape the market. Aftermath of global pandemic, ongoing technological advances, and geopolitical uncertainties, multiple forces to at play planning for 2025, both existing and complex. In this long term from article will develop into the comprehensive set of investment strategies that can help our investors make well-informed decisions in the space of such dynamic conditions. The first is understanding the 2025 macroeconomic environment. This environment into specified strategies, it's essential to understand the macroeconomic environment that will dictate market dynamics in 2025. The economic worldwide are still experiencing the triple effect of pandemic-related disruption. In 2025, this affects continues to shape government policies and government policies and consumer behavior, corporate decision making. This is corporate decision making. The environment influencing the factors coming years in economy. The first is the interest rate and the inflation, global energy crisis, geopolitical factors. Geopolitical factors. These these are the major factors influencing this year of economics. The first is interest rate. The interest rate central bank across the globe, particularly U.S. Federal Reserve, have signaled higher or longer interest rate environment to combat inflation and stabilize the economy. Interest rates are likely to impact both consumer spending and corporate investments. As well as next is the major factor influencing inflation. Inflation concern remaining the forefront with policymakers working to find a balance between fostering growth and containing inflationary pressures. Investors need to account for inflation's impact on purchasing power and assets performance. These interest rate and inflation, these are the mainly influencing the economy. After that, globe energy crisis. The global energy crisis transition continues and volatility in energy markets, especially considering oil and gas, will have significant impact on various industries as renewable energy investment rises. Traditional energy sectors may see shift in valuations. And last factor influencing the geopolitical factors. The heightened geopolitical risk, including ongoing tensions between major economics and political conflicts, will continue to create uncertainty in the market. This necessitates a careful approach to international investments. Understanding these macro factors help build a foundation for making prudent investment decisions. In light of these influences, let's explore key strategies to consider in coming years. After that, diversification remains essential. In times of uncertainty, diversification is a time-tested investment strategy that can reduce risk while still allowing for growth opportunities. The core idea of diversification is not just to own a variety of assets, but to hold a diversified mix that includes different asset classes, geographical locations, and industry sectors. Industry sectors. Diversification remains essential. Also, the three and four types of diversification. First, we select geographic diversification. The geographic diversification, while these United States remain a dominant market, investing in emerging markets, especially in Asia and Africa, can help capture growth that may outpace mature markets. The emerging markets have the potential to perform better due to youthful populations and urbanization and improved political stability. These are the geographic diversification. They majorly contribute to the population and urbanization and improved political stability. Next is sector-wise diversification. The sector-wise diversification, the major sectors technology, healthcare, energy, and finance are among the sectors that investors should consider coming the years. The technology sector is still seeing significant innovation with artificial intelligence and blockchain technology, whereas healthcare is benefiting from increased spending in biotech and personalized medicines. These personalized medicines. This sector is a majorly concentrated coming is technology, healthcare, and energy and finance. These four sectors definitely will come come definitely will come in the major part of contribution. As next is asset classification diversification. Asset classification diversify across equities, bonds, real estate, and commodities and alternative investments, such as private equity or hedge funds. The inclusion of fixed income assets like bonds can add stability to a portfolio, whereas commodities like gold serve as a hedge against inflation. The asset classification is major equity, bond, real estate, and commodity. Commodity is a major diversification. This both these all are asset classification is will give main profit stream for our investment. Risk party portfolio. The risk party approach spend investment in such a way that each asset classes contribute equally to portfolio risk. This method has grown in popularity, especially during times of economic turbulence. And third, is a focus on value stocks aim market volatility. The value stocks are typically companies with solid fundamentals but are trading below their intrinsic value. In an environment marked by rising interest rate, value interesting becomes a strategic choice for many investors. This is because higher rate trend to dampen the allure of speculative growth stocks whose valuation rely heavily on future earnings. The major market volatility and value investing. The major points is first is a defensive sector and high dividend yield stocks and financial sectors. These major 3 points. Defensive sectors focus on sectors that tend to perform well during economic slowdowns, such as utilities, customer staples, and healthcare. These industries provided consistent demand even though economic climates. And next is a high dividend yield stock. The high dividend yield stock that pay consistent and the high dividend yield can provide steady income, making them particularly attractive to retirees or conservative investors looking for cash flow. And companies in sectors like telecommunication, energy, and financial strength to offer these opportunities. And third sector is the financial sector stocks. Banks and financial institutions often benefit from higher interest rates through increased net interest margins. Adding exposure to financial stocks can be a way to capitalize on the macro trend and rising interest rates. Uh, uh, and fourth is the growth investing and the tech boom. Growth investing and tech boom. The growth investing, while value stocks are ideal during period of high interest rates, growth stocks should not be ignored, especially those in technology and innovation-driven sectors. Companies that demonstrate consistent revenue growth or lead groundbreaking technological advancement will continue to draw investor attention. The investor attentions, right, the three tech booms. The first one is artificial intelligence and machine learning. The AI is transforming numerous industries, including healthcare, finance, and consumer goods. The investment in AI-driven companies, whether software, hardware, or services, have a long-term growth potential. Another technology group is electrical vehicle and green technology. Green technology. The companies at the forefront of the electrical vehicle movement and green technologies will continue to attract capital with government subsidies and a societal push towards sustainability. This sector is ripe for significant returns. Another innovation is metaverse and digital innovation. The metaverse and virtual reality are expected to grow as technologies mature and more industries adapt this platform for customer interaction and work collaborations. The tech boom is AI and machine learning and electrical vehicle and green technology, metaverse and digital innovation. These are growth investing in 2025 requires investor to adapt a disciplined approach, focus on profitability and manageable debt levels rather than being swept away by hype. And fifth is emphasize inflation protected investment. The inflation is a persistent risk in 2025, and savvy investors say need to schedule need to sell their platforms from its recording effects on purchasing power, a range of inflation protected investment opportunities. Excellent. The protected investment, how we protect that our investment. That first is that treasury inflation protected investment, protected securities. It is called as TIPS. TIPS are a type of US treasury security indexed to inflation. These can provide safety and predictable returns that rise with inflation. Another one is commodity and precious metals. The gold has long been seen as an inflation hedge, but commodities like oil, silver, and industrial metals can also be effective during times of high inflation. Additionally, agriculture commodities like wheat and corn tend to perform well during supply side shocks. And Next is the real estate. The real estate investments, particularly the rental properties, can provide a hedge against inflation. As the value of property rises, so does the rental income. Real estate investment trust also serve as accessible way to gain exposure to real estate sectors. And sixth is take advantage of market cycles with tactical asset allocation. The tactical asset allocation is an active management strategy that allows investors to change their portfolio weights based on market conditions. This approach contrasts with passive by buy and hold strategy by adding an element of timing to allocation decision. The allocation decisions. The tactical asset allocation. There are two major points. First is identify opportunities during market corrections and sector rotation strategy. First, we see identify market opportunities during market corrections. The market will inevitably face corrections and periods of sell-offs in 2025. Tactical investors can take advantages of these market.
Sorry to interrupt you, sir. Your slides are not moving. You are in the same slide. Investment strategies for 2025.
Yes, yes. Here, 12 points is there. Now, I am discuss about sixth point. Uh, Second, this sector rotation strategy. The rotate investment into sectors that are expected to outperform based on the current spaces of this business cycle during periods of recovery. For example, cyclical sectors such as consumer, discretionary, and industrial do well. Seventh is green investing and ESG trends. The ESG trends, sustainable investing continues to gather momentum, and 2025 is no exception. Environmental, social, and governance factors are increasingly used as key metrics for selecting investments, as both individuals and institutional investors place greater emphasis on responsible investors. The investors, green investing and these trends is the three funds. First is green bonds. Green bonds issued by governments or corporation green bonds mutual environment projects and can be a way for investors to align their portfolios with sustainability goals. And second is renewable energy investment. The renewable energy companies from solar power providers to wind energy farms represent significant growth potential. Governments are doubling down on their renewable energy commitments, thereby offering ample investment opportunities in this sector. And third is a ESG fund. The ESG fund also mutual fund and exchange traded funds focusing on ESG principles have grown in popularity, providing diversified exposure to companies that align with sustainable values. And eighth is income investing for stability. The income investing for stability focus on generating steady cash flow, often through dividends or interest payment, and is particularly attractive during times of market uncertainty. The first is the income investing, a dividend paying stock and preferred stock, and uh, next is corporate bonds. The corporate uh, bonds. The dividend paying stocks, as previously mentioned, high quality dividend paying companies can provide a steady sources of income. Companies like Johnson Johnson, uh, Procter and Gamble, and other blue chip firms have a history maintaining and growing dividend payout. And second is preferred stocks. The preferred stocks are a hybrid security that offers fixed dividends and less risk compared to common equity. They provide a higher dividend yield and rank ahead of common stocks when needs come to payout. And third is a corporate bond. The corporate bond investment grade corporate bonds offer reliable income streams and reliable streams. Uh, the main attractive asset class for investors, high risk tolerance. Just a minute. Tolerate. Okay. Ninth is cryptocurrency digital assets. The cryptocurrency digital assets, digital including cryptocurrencies and blockchain-based technologies, are transitioning from speculative asset to more established financial tools. Despite their volatility, they remain an attractive asset classes for investor with a high risk of tolerance. The cryptocurrency digital as the Bitcoin as digital gold. Bitcoin continues to be viewed by many as a hedge against fight currency devaluation and inflation, making it an option for diversifying portfolios. It is status as digital gold is solidified as more institutional investors enter the market. The second is that staking and earning interest. The platforms now allow investors to earn interest on their digital assets through staking or lending protocols. This offers a potential income stream akin to dividend yield. And the third is regulated stable coins. With greater regulatory oversight expected in 2025, stable coin picked to traditional currencies might become more widely accepted as legitimate investment vehicles, reducing some of the risk inherent in the crypto market. Tenth is risk management protecting your investments. The risk management is an essential aspect of successful investment strategy, especially in 2025 unpredictable environment. Unpredictable environment because the major points hedging with option, stop loss order, and maintain liquidity. The stop loss order using options to hedge downside risk. Protective put allows investors to maintain their position in stock while minimizing downside exposure. Second is a stop loss order. The stop loss order setting stop loss orders on investment can be in simple but effectively way to limit losses during significant market downtrends. Establishing a clear exit strategy can help maintain discipline during volatility periods. And third is a maintain liquidity. Keeping a portion of your portfolio in cash or liquidity assets ensure that you have flexibility when opportunities present themselves during market conditions. And 11th is technological tools technological tools and financial advisory services. Utilize technological tools The use of tools and the use of technology has made investing more accessible and data driven. Utilizing advanced financial tools can give investors in edge in the 2025 market. The market. The market is the market. There are three advisory services analysis. The repo advisors. Repo advisory services provide algorithm driven financial planning with low fees. These platforms can help investors maintain a diversified portfolio aligned with their risk tolerance. And second is AI and big data analysis. AI-powered investment platforms can analyze huge volumes of data, identify trends, and predict market movements. Incorporating this insight into investment decisions would enhance portfolio performance. And third is financial advisory services. For those looking to navigate the complexity of 2025, consulting with financial advisor can offer tailored strategies that align with individual goals, risk tolerance, and market conditions. The final thought of crafting resilient portfolio for 2025 in our investment strategy for 2025, navigating market uncertainty with confidence. The finally 2000 coming year will be the tested year. Resilience and adaptability of investors, given the complex interplay of economic recovery, inflation concerns, geopolitical tensions, and rapid technological advancements, the best approach is a balanced one. Diversification, disciplined growth in investing, attention to value, opportunity, and risk management are all critical components of a successful investment strategy. Investment strategy. Investors should focus on building a well-rounded portfolio that includes equity, fixed income, real estate, commodities, and even alternative assets like cryptocurrencies. Tactical assets allocation and the willingness to rotate between sector based on macroeconomics conditions will be key in adapting to market volatility. Next is investment strategy for success. The investment strategy for success. Did you know that nearly 80% of individual investors fail to achieve their financial goals? As we approach 2025, it's key to change how we invest to meet and beat our financial goals. This 2025 investment will expose a smart strategy for a secure financial future in the complex investment world. We will focus on making the most our investment while keeping risks low. We will use the latest research and proven methods by following the best investment strategies 2025. We can confidently move through the investment world. This ensures we make the most of every chance to grow our wealth. As we plan for success, knowing the market details is crucial. The guide will crucial. The knowledge and tools to succeed in 2025 25 in investment and our plan. And next year, our plan. The heat takes away, which is the major heat takes for our investment smart strategy for success. The first is over 80% of individual investors struggle to meet financial goals. And second thing, understanding effective investment strategy vital for success. And and then maximizing returns while managing risk is our primary objectives, as well as cutting edge research can enhancing our investment decisions. Then 2025 investment landscape demand the approach, proactive approach. Building wealth requires a strategy informed in mindsets. These keys are very useful for our strategies for success. And next, understanding investment landscape for 2025. The category wise investment landscape, the investment sense for 2025 is changing fast. We need to pay close attention to the trends. Market trends for 2025 are changing how we look at investments. We must mix deep research with an eye on the economic forecast 2025 to make smart choices. Right now, the economy is showing signs that could change our investment plans. We see changes in interest rates, inflation, and jobs. These changes affect the market and different sectors. Focusing on sectors that stay strong during the during those times can help us better choices. Looking at 2025 investment sense, uh, tech advancements are key. Things like artificial intelligence, renewable energies, and biotech could bring big wins. But we also need to watch sustainability, which is more important for investing for investing in investors. No, the category wise, the first is a technology category and technology, renewable energy, and biotechnology and sustainability. These are the categories. The first is technology category, high potential impact investment opportunity, high potential impact for uh, artificial intelligence and cyber security. Renewable energy is a medium potential, medium impact, solar and wind power, as well as biotechnology. Also, potential impact is very high, and investment opportunities are healthcare innovations and sustainability. Last one is sustainability. The sustainability impact is a medium impact. The investment opportunity is a green investments. And next is the financial importance of importance of importance of financial planning for 2025. Planning your finances for 2025 is key to reaching your short and long-term goals. A solid financial plan helps to us know what we want, understand how much risk we can handle, and map out our financial future. First, we need to set clear investment goals for 2025. This means setting specific, measurable target for our investments, whether it is savings for retirement, a house or your kids college. These goals will shape our financial choices. Then it's important to use budgeting tips wisely. A budget lets us manage our money well and make sure our spending matches our investment plans. By keeping track of our income and expenses, we can find way to save more. Understanding our risk tolerance is also part of financial planning. Knowing how much risk we can take and affects our investment choices. This helps us pick the right mix of stocks, bonds, and other investments that fit our financial goals. The To show how financial planning helps, look at this comparing planned and unplanned investors. There are four aspects is there. The first aspect is goal clarity. The goal clarity is high specific and measurable goals in planned investors. But unplanned investors is low value or no goals. Then the second object aspect is budgeting. Budgeting also planned investors is a framed clearing budget approach. But unplanned investors, uncontrolled spendings. And third aspect is risk assessment. The risk assessment, planned investors are informed, understanding risk tolerance, but unplanned investors unaware the risk taken without understanding. And the last is overall financial success. The planned investors is high, achieve goals efficiently, but unplanned investors lower and often fall short. And next, investment key strategies to consider. The diversification strategies. The diversification strategies. As we look ahead 2025, knowing the best investment strategies, we should focus on diversification and risk management. These strategies helps us reach our financial goals and protect against losses. And diversification strategy. Now, the diversification is a key part of smart investing. By spreading our money across the different types of investment, we boost our chances of making money. We also protect ourselves from big loss and big loss in our area. Here, some top diversification tips. The diversification tips, the majorly asset allocation and geographic diversification and sector diversification. The asset allocation, our investment we always mixed stocks, investing mixed stock, bonds, and other investment based on how much risk you can handle. The asset allocation is very important for our diversification strategy and portfolio strategy. The second is geographic diversification. The geographic diversification also mainly put both US and international markets to avoid losing out in one area crops. And that is sector diversification. The sector diversification, our investing money spread across the industries to lessen to risk of losing money in one sector. You put you investing in different type of sectors. For example, oil sector, gas sector, oil sector, and mechanical, technological. These aspects. One is definitely in case fall down. Another sectors definitely will help. So your money is investing in different type of different type of industry in investing your money. That is called the sector-wise diversification. And risk management approaches. The managing risk well in 2025 our key to keeping our investments safe from market ups and down. Here, some one ways to managing risk. The how to we manage hedging and stop loss order insurance option. The hedging use options and futures to lessen the chance of losing money, and then stop loss order set up automatically sets at certain price to stop big losses. Insurance option also they think about getting portfolio insurance to protect against sudden market changes. By using diversification, a strong management, we can better handle the challenges of investing in 2025. The strategy wise, first is asset allocation, geographic diversification, sector diversification, hedging, stop loss order, insurance option. The asset allocations already I told previous slide. Previous slide, investment across asset classes benefits reduce overall risk. And next strategy is geographic diversification. It means investing in various globe markets. It benefits to protection against regional market declines, and as well as sector diversification, also across different investment across different sectors. Its benefits minimize sector specific risk. And then hedging. The hedging is using a financial instrument for loss offsetting. Its benefit is a risk reduction. And stop loss order, so automatic selling to limit losses. Its benefits prevention of significant losses. And last strategy is a insurance option. Insurance option means it's a protective against market downtrends. Its benefits enhanced portfolio security. Next. Hello. Hello. Top. Please put mute your phone. Top investment opportunities for 2025. We are looking we are looking at sorry. We are looking at key areas for investment in 2025, focusing on emerging market and tech innovations can lead to big returns. These trends helps us stay in the competitive market. First one is emerging market and innovation. The emerging markets are top pick for 2025. South Asia, Latin America, and part of Africa are growing fast. They have rapid population growth first. Second is the increasing urbanization and industrialization. And third is the expanding middle class with growing purchasing power. These markets offer chances to invest in growing consumers market and new resources. The sectors like agriculture, renewable energy, and telecoms are said to do well. They make for strong investment choices. These are the investment these are the emerging markets. And second is technology innovation. The technology sector innovation, the tech is changing the world fast for 2025. Tech innovations are a big draw for investors. First is the artificial intelligence and machine learning, and uh, renewable energy technologies, including solar and wind. Third is financial technology, as well as financial technology, transforming payment systems. Investing in these areas matches globe trend towards being green and efficient. It also offers huge growth potential. Companies at the forefront of this innovation could grab a big share of the market. This makes them great opportunity for smart investors. And next is latest investment trends for 2025. As 2025 approaches, it's crucial to know the latest investment trends. These trends helps us make better financial choices. The focus on social responsible investing shows investors care about ethics and profits. Market analysis for 2025 shows passive investing is on the rise. More people are choosing ETFs and index fund for their low and is this shift means we are moving towards holding investment for the long term, not just trading them often. Let's explore main trends world main trends. The main trends is the social responsible investing, passive investment strategy, and technological technological integration, geopolitical awareness. The social responsible investing in companies committed to ethical practices, its impact an investor encouraging aligning investment portfolios with personal values. And second trend, passive investment strategy. It utilizing index fund and ETFs to minimize cost, impact on increasing its impact. This impact increasing accessibility for everyday investors. And third trend is technological integration. The technological integration is leveraging AI for analysis and decision making, impact on enhancing investment precision and reduces risk. And last trend is geopolitical awareness. The geopolitical awareness, monitoring globe events that affect market stability. This impact is promote informed decisions making with real-time data. And next, just a minute. Next is investing for future. Why 2025? Investing for it is a long term versus short term gains. That's what future. Looking ahead 2025, it's key to 25. See it role in our investment plans. We need to balance between long term and short term investing. This balance affect our financial health. It helps you as use our money wisely for now and the future. The long term investment, when planning for the future, we must think about long term versus short term investing. Long term investing usually means steady growth and less risk. It lets us handle market ups and down better. On the other on the other hand, short-term investing can bring quick profit, but this risk is high. It needs to constant attention and fast decisions to avoid the losses. Finding the right mix of these strategies for doing well in 2025. And impact of globe investment, globe event on investment. Sorry, one second. Long-term investment. The all are saying long-term investment risk is very low risk, but long struggle of long-term investment also, because Nifty 50 companies in 1996 versus 2025. Only 11 companies from the Nifty 50 in 1996 remaining part of the index in 2024. The for like Reliance, Tata Motors, Steel, and Aditya Birla, SBI, Bajaj, these are 11 companies only live in the market. Live in the market. How to we are how to we have how do we get confident for long-term investment? So long-term investment also having the risk. Next, best investment strategies for 2025. Looking ahead 2025, picking the right investment strategies is key. The right investment strategy. The strategic assets allocation is top size. It spread investment across the different types of balance risk and rewards. This depends on our financial global goals and the market state. Yeah, this approach helps us reduce the risk and grab opportunities even when the market is unpredictable. By looking at the economy, we can spot which investment might grow the most. As well as sector rotation is another important strategy. It means moving money into sector likely to do well because of economic trends. For instance, when the economy is recovering, tech or consumer spending sectors might bring in more money. But when the economy slows down, sectors like healthcare or utilities would be a safer bets. Using these strategies, strategy wisely can set up for success in 2025 by keeping an eye on market trends and adjusting on our investments. We boost our chance of making money. It also helps us stay ready for whether future brings. The best investment strategy. The conduct through research and potential investment and consult with the financial advisor for tailored guidance, as well as practice disciplined investment by authoring your strategy, regularly review and adjust your portfolio as needed. They stay informed about market trends and economic conditions. By following these tips, we are preparing ourselves make market informed investment choice in 2025. Next. Next investment. Next is investment vehicle. Yes. Next is investment vehicle to explore. There are many types of investment, and picking the right mix can greatly affect our returns in 2025. Here are some important options to think. Some important options. The first is the stocks, bonds, ETFs, and alternative investments. The stocks can grow a lot over times, especially in new market and cutting edge sectors. The potential stocks vehicles, the potential benefit, high growth potential, and risk is market volatility. And then second is bonds. Bonds offer steady income and can help balance the ups and downs of stocks. Its benefits stable income, and risk is interest rate risk. And third is ETFs. Let's spread our investments across various assets at lower cost than mutual funds. It's a diversification benefit, and risk is market. And last is alternative investments. Alternative investment is a real estate, commodities, and cryptocurrency for offer unique chances for growth beyond traditional investments. Its benefit diversification and potential higher return. Risk is less liquidity and higher risk. Higher risk. The effective portfolio management. The conclusion, as we want our 2025 investment, we look back at the key part of our strategy. We have shown how important it's been financially wise. It helped deal with complex worldwide investment. We look at the different areas why spreading our investment scheme. The lesson from 2025 remind that making smart choices vital for our financial success. We need to say alter that adjust to market strategy by always learning and improving our strategies. We set success in 2025, changing investment sense. Forward, a clear vision and solid plan. This way can make sure our growth safely in the future. Thank you. Ma'am?
Yes, sir. Participants, if you
Yes.
have any doubt, you can ask. Yeah.
Yes. Please put description, text message. Just a minute. Slide it down. Expose.
Hello, am I audible, sir?
Wait.
Hello, am I audible, sir?
Yes.
Am I audible?
Yes, sir. I'm
So, sir, recently, can we plan the strategies according to the new tech-based firms? So,
yes.
if we invest in such kind of tech-based industries, what is the outcome? Whether it may since startups they have no cash flows, So
Yes.
if we consider to invest in, what is the risk and return like
Risk and return in tech wise, sir.
when we invest in the startup based companies, tech based companies, of course there is a growth for the tech firms and all. But when we invest in the tech startup 1 year, 2 year, because they have no cash flows and all. So when we are investing in such kind of companies, what are the due diligence or due care to be taken before investing or committing our funds in such companies? Can you give some tips?
Yes, sir. Tech-wise company definitely coming years, tech-wise company will get profit. Your choice is startup company. You know, startup company. My suggestion is you go on stock market in Nifty 50 company in the tech-wise technology industry based company. You select that. You select for definitely will get that profit. The startup is a initial stage company. No, that company we have no confidence for that company because of beginning. Already existing startup company you put investors. Okay, sir.
Thank you, sir. Thank you.
Thank you. Thank you. Next. Anybody having questions?
Participants, if you have no doubt, shall we wind up the session, sir?
Okay.
Yeah, I would like to thank Kumar sir for taking the session excellent. And I would also like to thank all the participants. And all the participants are asked to fill the feedback form in chat window. Thank you all.
Thank you. Thank you to all.
Dear organizers, is there any opportunity to engage one session on finance theme? Hello, am I audible?